Welcome to this short video on how to simplify your bookkeeping and make life less stressful for yourself. The first thing I've got to say is that bookkeeping isn't rocket science. People make it more difficult than it needs to be. So let's get straight in and look at the key elements of bookkeeping. There's 5 key elements: when, who, how, why and how much. The when is the date of a transaction. This is the date the money was paid to you or you paid the money out. This isn't the date of the invoice, it isn't the date the work was done or the goods were sold. For the basic bookkeeping side of things, this is simply the date the money changed hands. The second element is who. This is simply the name of the customer or the supplier or government organisation or bank or whoever paid you the money or whoever you've paid the money to. The third is how. This is the most fundamental and yet often overlooked element of bookkeeping. This is, for example, a payment out. The how is which bank account, whether it was a business current account or the business credit card account or your personal credit card account or your personal business account. Your personal current account, or paid out of cash, or paid in some other way, some other account. On the income side, it's what you did with the money. If a customer pays you in cash, the initial entry's got to be cash, but we also have to record what you did with that cash. If a customer pays you directly to your current account, well, obviously that's a business current account. Also, nowadays, more commonly, we've got customers paying by credit card or PayPal. So the how, in those cases, is a PayPal bank account or the credit card merchant bank account. So those are all the elements that need to be recorded for the how, which makes life very difficult if you're only recording on analysis paper or a simple spreadsheet. The next element, number 4, is why. This isn't so much why you've spent the money, it's more an allocation of the money. So for expenses, your why would be various options such as purchases for resale or telephone or stationery or advertising or proprietors' drawings. For income, the why could be for sales, bank loan advances, grants received, tax refunds or whatever. So you need quite a list of various analysis headings. That's known as a chart of accounts, and most accounting software will come with a common chart of accounts which covers most small businesses. And finally, how much. That's simply the amount that you actually pay or receive, which again, sometimes that can be slightly different from what the invoice says. If you're offered or offering early payment discounts, or there's a credit note involved, it might not tie in exactly with the invoice. But what is important is the amount you pay, not the amount that says on the invoice. Small amounts one way or another are insignificant and can be ignored in the most basic bookkeeping. So let's move on a bit. Here are just some subjects that we'll be discussing further on in the video. Reduce the number of transactions, keep business and private transactions completely separate, avoid contras and round sums, avoid cash transactions, properly deal with petty cash, keep separate bank and credit card accounts, keep completely up to date, use a simple computer software package and file and keep the paperwork. Now we'll look at each of those in turn. Firstly, reduce the number of transactions. And no, we're not telling you to leave transactions out of your records. What you need to do is just make fewer transactions. So if you've got several bills from the same supplier, just pay them all with one cheque instead of writing a separate cheque for each bill. If you've got lots of petty cash payments, then just add them all up and write one cheque out of a business for the total of all the petty cash for that week or that month, instead of having line after line after line of tiny amounts in your accounting records. If you've got fewer transactions, you've got less bookkeeping to do, and smaller bookkeeping files mean less work for the accountant. So ultimately, your accountant's fees should be lower. The next point is to separate your business and private transactions. It's certainly when you're a very small business, it's very tempting to just mess up your accounts, either by not having a separate account at all for your business, or by just dipping in and out of your business and private accounts according to whichever one has more money in at the time. That sort of thing will make your bookkeeping life a lot harder, because you've got more transactions to put in your business accounts for a start, if it's cluttered with lots of private transactions. And also, if you're paying things or receiving things into a personal bank account, you've got a greatly increased risk of forgetting about them, meaning your accounts and tax returns will be wrong. So let's get into the habit of paying personal expenses from your personal accounts, business expenses from your business account. If you haven't got enough money in your personal account to pay some expenses, then do a transfer from the business account to the personal account. Your bookkeeping will be a lot easier with a single transfer every month going across to your personal account than it will be with dozens of personal bank payments coming out of your business account, all of which you've got to put in your bookkeeping. There's just no point in putting them through your bookkeeping only to put them in your drawings column. They may as well have just gone out of your personal account in the first place. If you've got something which is partly business and partly private, for example, costs of your home, if you're using your home for business, you're still better paying them out of your personal account. All you need to do then is just keep a note of them, or keep all the invoices in a file and let your accountant have them at the year end. It's easy enough to do a year end adjustment to bring in a proportion of private expenses, like for your home, or your mobile telephone, or your private car usage. It makes life a lot easier just leaving them out of your business records in the first place and paying them privately. Like I say, the accountant can easily include those in your year-end accounts and tax return. Next point is to avoid cash. We all like to have cash. It's nice for a customer to pay us in cash, and it's nice to be able to pay our suppliers in cash. But it's fundamentally flawed in that there's no audit trail of money coming in and money going out. So unless you've got a bomb-proof bookkeeping system that records all your money in and all your cash out and proves one to the other, you could well have major problems with the tax authorities. And also there's far greater risk of you actually forgetting some income or expenses. Certainly if you've paid something out in cash and you've left the receipt in your jeans pocket when it goes for washing, that is lost forever. So if you do have to deal with cash, get into the habit of keeping some sort of notebook either with you or on the shop counter, so that you can become almost fanatical in noting down all the money paid to you and all the money you pay out, even if you're taking the money personally for your own living expenses. It still all needs to be recorded and it all needs to be reconciled. So if you've got, say, £100 coming in across the shop counter, you need to be able to prove to the penny where that £100 went. Nothing the tax inspector likes more than when he's doing a tax enquiry is to look for balancing figures. because it tells him that the cash records aren't bomb-proof, they're not robust, there must have been mistakes, and that gives him the opening to decide and make his own opinions of transactions which you haven't put in your books in his mind. And without good records, you have no way of arguing against him. The whole point of using bank current accounts or credit card accounts is that you've got a statement showing the money coming in and the money going out. So if your bookkeeping falls apart, you lose it, or you have a computer problem, or you lose all your paperwork, as a last resort, you can always get bank statements from the bank which show the transactions coming in and out. So it's always better to put as much as you can through the bank accounts. Yep, we've all heard some businesses want to pay out in cash, pay the wages in cash or pay suppliers in cash because the banks charge so much for handling the cash, certainly for shops, market traders and such like. Well, yeah, that's fair enough, but you have to weigh the costs against the potential downsides of tax enquiries and having to spend more time on your bookkeeping if you want to save bank charges in that way. You may also like to consider changing banks because there are some banks out there that actually like cash being paid in. So there's always the option to change bank accounts. The next point is avoiding contras and round sums. Now, a contra is where you buy and sell stuff to the same person. You may buy raw materials from a particular supplier and then sell the finished product back to that supplier. Now, when you owe the supplier money and the supplier owes you money, it's very easy just to ignore it really and have it in your own mind that basically they're cancelling out. That's very, very bad. You really should pay your bills and get the supplier to pay their bills to you, even if it just means exchanging cheques to each other. This not only keeps your books simple, you're also protected in case your customer goes into liquidation or receivership. And this is something we do see quite often, some very big amounts. Unless you do something with your records, the amount of money owed by you will be increasing month after month after month. Similarly, the amount owed to you by the same person will be increasing month by month by month. Now, unless you both agree to either contra off those balances in each other's ledgers or give each other cheques to clear them, on paper you still owe that money to your supplier. Now, if the supplier goes bankrupt or in receivership, the receiver or liquidator can still legitimately claim from you the money that you owe them, which is the accumulation of invoices on your ledgers, but you don't have a right of set-off for the money they owe you. So you could end up having to pay all that money to the receiver or liquidator, even though that firm owed you a similar amount of money. And that is a very nasty trick, which is all too common. So please don't do it. Just transfer cheques to each other and keep your ledgers tidy. The other point is never to pay round sums to your suppliers. If, for example, you owe, say, £1,200 to a particular supplier, it's very tempting just to send them a cheque for £1,000. But in actual fact, that is going to make your bookkeeping difficult. You'd be far better, if you want to pay around £1,000, you find a group of invoices that comes to around £1,000 and pay the right amount for those invoices, even if it's £957 or £1,021. It just keeps your ledgers clean, it keeps their ledgers clean. When you sort of pay in round sums, it's very difficult to allocate the money against the invoices in your ledgers and their ledgers. And there's just no point in doing it. You may as well keep it tidy. Otherwise, you're just creating complications for yourself. Next point, petty cash. We've already touched on this. If you're doing a lot of little out-of-pocket purchases, like window cleaning, buying pints of milk, a few stamps at the post office, you really better just pay them out of your pocket, making a little tally list of all the payments you're making, and maybe every week or every month or every 6 months or whatever, tally it up and get the business to write you a cheque to cover all the little piddly little bills that you've paid out. Then in your accounts it's just one line, one payment. Otherwise it could be 20, 30 or 40 lines in your accounting records, all of which you've had to enter in, check. All it's doing is creating more work for you and increasing the risk of getting something wrong. So you're far better just lump it all together and just claim it out of a company occasionally whenever the figure gets big enough to warrant it. Separate bank accounts, again, we've touched on it, but really, you really do need separate accounts for your bank, for your business. This doesn't need to be business bank accounts. If the business is very small scale, I'm sure you'd get away with opening a second personal current account with your existing bank. It may be against their terms and conditions, so you'd have to check that. But as long as you're not putting too many transactions through the bank account, even if it is against the terms and conditions, the banks generally don't cause too much fuss. Certainly if you've got a lot of transactions or you need a business account because you need to bank cheques made out to a business name, for example, then you need a business account. There's still banks offering free banking or cheap banking for the smallest businesses. So all you need to do is shop around. You don't have to pay exorbitant bank charges. Likewise with a current account, also get a separate business credit card. Again, a personal credit card is fine if you don't want an official company credit card. What really matters is keeping your personal stuff separate from the business stuff. So if you've got 2 credit cards in your purse or your wallet, remember one of them you use to buy your personal stuff, the other you use to buy your business stuff. If that means, for example, if you're in a stationer's and you want to buy something personal and something business, then yeah, get 2 separate transactions. Just have 2 baskets when you get to the till. It'll make your bookkeeping a lot easier further down the line. One other point, if you've got a limited company, you really do need a company bank account and a company credit card account. You cannot use a personal current account for paying in and drawing money out of a limited company. A limited company is its own legal entity, so it does need to be a limited company bank account. And again, on the next slide about credit cards, we're finding these days virtually all your suppliers will accept a credit card. The days are long gone where firms have back offices with lots of ledger clerks dealing with paying one cheque for all the bills raised a couple of months ago. Certainly at the smaller end of the scale, you're far more likely to have to pay in advance or pay with the order. And with more and more being done on the internet, that means credit cards. The other good thing with credit cards is, again, we've got this audit trail that even if you lose your paperwork or you mess up your accounting records, you've still got a bank statement showing who you paid the money to. So if all else fails, you've still got that audit trail. And of course, the good thing about a credit card is you've got between 1 and 2 months credit, which is probably easier to get than getting any credit terms from a supplier these days. So as long as you pay off your credit card in full the following month, no bank charges, no interest. So it's a no-brainer really to use some form of credit card for your business. Right, back to more basic matters. You've got to keep it up to date. Again, people make life hard for themselves when they come and don't do any bookkeeping for several months, or even just once a year. By that time, they've lost paperwork, they've forgotten how things were paid or who paid the money. And we know for a fact that bookkeepers and accountants spend most of the time at the year-end accounts and tax returns chasing up all the lost bits of information where you've forgotten to put the name on a cheque stub, or there's some money being paid into the bank and you've not made a note of which customer paid you it. It's all the investigative work, the forensic work, which takes a bookkeeper or an accountant a lot of time. You've got to remember, if you can't remember who you paid the money to or who paid it to you, then your bookkeeper or accountant won't have a clue either. So it's best to get into the habit of doing it monthly, if not weekly, if not daily. If you make it part of your routine, it'll take minutes rather than hours. And also simple things like when you pay a bill, just make a note on the bill of how you paid it, whether which credit card, whether you paid by a cheque, if it was paid by a cheque, the cheque number, and also put on the bill the date you paid it. Just little things which help the audit trail further down the line when it comes to the bookkeeping and accounts preparation. Similarly, on the income side, if someone's paid an invoice, get the copy invoice in your file and just make a note on it, the date it was paid, how much they paid and what you did with the money, whether it went straight into the current account or whether it was paid in cash. Simple little things that take seconds to do can save you literally hours at the year end and can save tens and hundreds of pounds off your bookkeepers or your accountants' fees at the end of the year. What we would really strongly recommend everyone to do, however small your business, is to use some computer software. There's no excuse not to use it. You can get free software. The free version that we really like and recommend to our clients is VT Cashbook, which you can load from vtsoftware.co.uk. It's an entirely free product, no obligation, and it's a very robust piece of software that's very easy to use. You'll see in other videos that I've done some videos on how to set it up and how to use it, both for small businesses and for your home finances. We really, really, really hate spreadsheets, especially homemade spreadsheets. You might think you're doing a good job listing all your income or all your payments on a spreadsheet, but in literally 99% of the cases we see, they're full of errors. There's information not been put on, too much information sometimes, and not the information we want. To actually use a spreadsheet, you need some sort of three-dimensional aspect to it, which is beyond the average amateur spreadsheet user. So please don't waste your time and your bookkeeper or accountant's time with a homemade spreadsheet. Just too often we see columns that don't add up, rows that don't add up. People use colour coding for various reasons. You might find a list where the figures are in various colours, blue, red, green, which meant something once to the person who wrote the spreadsheet, but mean nothing to the bookkeeper, the accountant or a tax inspector. Even worse, the user of your spreadsheet may well be colourblind and may not even notice there's different colours. So using colours is really pointless and very dangerous. And also, where you've got a negative number shown in red without a negative sign or brackets, again, someone colourblind wouldn't know it was in red, wouldn't know it was a minus figure. So you do have to look at who the users are going to be of your bookkeeping. And the other aspect with bookkeeping on spreadsheets, which causes a lot of trouble, is by turning a cell into a value, into a non-numeric cell. If you just put the number 10 in a cell, then that's a number 10 and it'll be included in the total. But if you put the pound sign in front of a 10, or you put, say, the space bar before the 10, then it's not a number anymore and it won't be included in your totals, even though you might think it will, and it might look the same as all the other numbers. So those are just a few of the problems with spreadsheets. Once you've done your bookkeeping, you've got to file and keep the paperwork. Now again, we don't need complicated filing systems. If you're filing on paper, just a lever arch file with some dividers in will be fine. You either put all your invoices in month order, or you put them in supplier alphabetical order. As long as you've put them somewhere and there's some sort of order, that is absolutely fine. What we don't want is a carrier bag or a shoebox full of screwed up papers. All that's going to do is take your bookkeeper or your accountant a lot more time, and you're going to end up paying for that. And it's only basic admin work, which you'll be paying well over the odds for a professional to sort through it. Same with bank statements. Put them in your file, date order. Doesn't matter whether it's oldest to newest, newest to oldest. As long as you've got some sort of order, that's absolutely fine. If you're doing everything on computer, if you've got your bank statements online, or your suppliers and customers' invoices are transmitted by email, then there's no need to print them out. We don't need paper copies. But what you do need is to have some form of electronic data structure that you can preserve. So that means some sort of directory structure, maybe a directory for supplier invoices, another directory for customer invoices, a directory for bank statements, all under year by year directories. So you've got your 2013 directory with bank statements and invoices directories under it. Again, it doesn't really matter exactly how you do it. What's more important is that you've got some sort of system. Now, if you're using it on computer, the most important thing to do is make sure you've got backups and make sure you can restore your backups. That's either to external hard drives or preferably into the cloud, into some online recovery system. And if you are doing any form of backups or recovery systems on your computer, don't just set it up and hope for the best. Make sure you actually know how to restore it all and that you practice restoring it all to make sure it all works. Nothing worse than thinking you've got it all set up and it's all been restored into the cloud, and then when disaster strikes and you want it, you find that it was set up wrong and there's nothing you can get back. And don't forget, for businesses, you've got to keep all your paperwork for at least 6 years, and some paperwork will have to be kept almost for life, such as some details regarding employees. So be very careful before you throw anything away. So to summarise, bookkeeping isn't rocket science. The more effort you put in, the day the transaction happens, to make some notes on the invoice, how you paid it, who paid it, what you did with the money, check numbers. The more time you spend putting those documents in a filing system, and the more time you actually spend on the day writing up your accounts, whether it's on computer or an account paper book, you'll save yourself massive amounts of time at the month end, at the year end. And that means you'll also save yourself bookkeepers and accountants fees. All by just spending a few extra minutes a day to put things in order. Bookkeeping isn't rocket science. It is little more than housekeeping and basic admin. So you can forget double entry bookkeeping and all the complications that you can imagine with ledgers. At the end of the day, all we need to know is who paid you the money, when they paid it, why they paid it, and who you paid money out, when and why. It's as simple as that. And as long as you've recorded all that the day it happens, doing your bookkeeping will be easy. Giving your books over to your bookkeeper and accountant will be less stressful, will be a lot quicker, and ultimately your accountant's fees will be a lot less as well. I hope you found this video interesting as far as bookkeeping can go. And please have a look at my other videos, especially the ones as to how to set up and use a VT cash book, because we do find that is very popular and it does the job perfectly for household finances and small business finances. So thanks for listening, and hope